Hi everybody, I'm Sergiok.kilembe from Trading Wall Street TV, and thanks for joining me for this week US market weekly reports. Okay, we're gonna have a look at the stock markets, US major indices, the bond markets, the yield and the tradable CFDs, and next we're gonna have a look at the US dollar index, and then oil, the crude and the Brent, and precious metals as gold and silver. And at the end, we're gonna have a look at Bitcoin, and finally, we're gonna take a look at the economic calendar. Okay, let's begin with the Dow Jones Industrial Average. Inside week candle for the third consecutive week. We are here, just above the past resistance, and we are going nowhere. You see the trend line over here, and that particular trend line we tried to break below, and then we came back higher and closed higher, right above the 21 weeks MA. So now for next week, I'm expecting more sideways movement, maybe a little bit a push towards the, let's say, the 18,490 points. So we're gonna remain in this sideways movement, Okay, now let's have a look at the diamonds. Same stuff, we ain't got nothing more to say here. As you can see here, I'm already preparing some bearish positions, some shorts positions, and these are the probabilities, So this gap over here, feel the gap. Now inside week candles, a lot of doji, dragonflies and other stuff, spinning tops, and now I'm waiting for the markets to go below that resistance at 180. I already had a trade. For those of you who are following me, past week I described my trade idea, and I went out with a small loss. That was a small position due to the sideways movement. I couldn't handle that type of waiting for the markets to go down. So I decided to cancel the position right around the $182.50, and that was a small loss for a loss of $2.5 dollars per share, So that's it. But my idea, I was too early, in the trade. So that was the reason why I decided to cancel the trade. So now I'm re-entering the trade. I passed the order, and now I'm waiting for markets, to go down. First of all, I need to see a close below the 21 MA and a close below the trend line over here. You see, we are in a bullish channel. So I need to see a close below the channel's supports and below the 21-week MA, and then as you can see, we have a huge spread between the 21-week MA and the 52-week MA. That's a volatility, so I'm expecting that, but for the moment I'm expecting more sideways movement. Okay, now the Nasdaq. First of all, let's have a look at the Nasdaq composite. That's the composite, and over here, as you can see, all-time highs, break the all-time highs, but the volume is great. But when I'm looking at the psychology, the signals that the candles are sending me, that's now this is not power candles. These are indecision candles. We need more steam, more power, more conviction, and I can't see, any strong belief, I see doubt and uncertainty. So I'm expecting markets to go a little bit higher and to reach the channel's resistance over here, and then go back lower, towards the 21-week EMA. So I'm expecting that. Now let's have a look at the NASDAQ 100. And over here, that's the same scenario, So there is it's all that's been said, So here we are more closer to the resistance. So now I'm expecting more sideways movement. You see here the spinning top, that's indecision, inside the week candle. So now I'm expecting the markets to continue sideways. Maybe we can have a type of bullish trap. You see, open over here, pop higher, and then boom, vanish. So I'm expecting that. Now let's have a look at the QQQs. The ETF, same scenario, but over here, as you can see, I'm already having some trading ideas to the downside, some shorts positions. And first of all, this one was successful just for 1 week, in the same week, but then this bullish rejection candle engulfing bullish over here. You see a spinning top and an inside week candle. So maybe I'm gonna wait, and I'm gonna wait for confirmation. I'm gonna wait and see. Maybe you can go a little bit more higher, but for me, I'm expecting a fall. So I'm already started to placing some orders to the downside. QQQ, that's it. Now let's have a look at the S&P 500. First of all, here on the map, sectors map, weekly performance. Great winning week for Amazon, for Apple, ExxonMobil, Chevron. Healthcare, the healthcare sector, bad week. Utilities, bad week. Industrial goods, mixed. Over here, consumer goods, mixed. Financials, mixed. And over here, technology, big losses for Google, small 1.3% down for Google. You see here AT&T and Verizon, on the telecommunication services. Now let's have a look. Now we are entering October. Let's have a look over here at the monthly performance. As you see, the great winner, Amazon. You see, technology was doing quite well. Here, services is kind of mixed. Basic materials, 60% good performance for 60% of the companies. 60%. Here, healthcare, bad month. Industrials, mixed, but losses for GE. Utilities, good month. Consumer goods, bad overall, but huge gains for Apple due to the iPhone 7 and past earnings and other stuff. Amazon, incredible. And over here, the financials, with the Wells Fargo, the fake accounts problems and all that stuff. The Bank of America Corporation, bad. JP Morgan, Citigroup, Berkshire Hathaway is bad. They're related, heavily related to Wells Fargo. And over here, Visa, MasterCard are doing good. And Goldman Sachs had a bad month for Goldman Sachs, and bad month for American Express. That's it. Now let's go back to the charts. Over here, the S&P 500, same type of scenario. Inside week candle over here, 1, 2, 3 week sideways movements above the supports over here, above the 21 weeks MA, and just below the 4 weeks MA and the 8 weeks MA. You see those three moving averages moving sideways and are parallel one to each other, And you see over here the 52 weeks MA. So now we can see here a bounce For the bounce to be complete, we must have a break above the all-time high and resistance above the 2200s, and below that, below the 21-week MA, we're gonna go lower and first target the 52 weeks MA, or these past here, the pivot points over here, that pivot point region, that past support over here at 2030. Okay, now let's proceed. Here the SPY spiders, and here, as you can see me, I'm already I'm already waiting for a let's say for shorts positions, you know, below $212. You know, I'm gonna go to the downside because we're gonna be below the 21-week MA. You see the spread between the 21-week MA, the 52-week MA, and that candle over here. That's a great signal for me that markets could go down. You know, we rejected heavily the all-time highs and the resistance at $220, and now you see no steam, no power to regain, you know, that week, that heavily that loss over here. You can recover that. So now I'm waiting patiently to enter those shorts positions. Okay, now let's proceed. Let's have a look at the VIX volatility index. Okay, VIX, excuse me, I'm gonna clear this, and that's it. You see, inside week candle, all the moving averages are moving sideways or in parallel modes. So what we expect more volatility in this month of October, prior to the elections, you know, in November. So more indecision and more volatility. That's what I'm expecting, you know, for this October 2016. Okay, now let's proceed. Let's have a look at the small caps, the Russell 2000, and that's it. You see here the highs go lower. Now we are in a bullish trend, strong bullish trend, trying to go and reach the past resistance all-time high over here at 1290, and over here we have a three consecutive inside weeks candles. We remain bullish, but in inside week type of pattern, you know. So now I'm expecting the markets to continue in that particular pattern in this inside week candle, and maybe I'm waiting for a break, maybe above 1260. We can go bullish, but below that we already we remain above those. Excuse me, I'm gonna quit this. Okay, over here we remain above the 4-week and the 8-week moving averages, but you know, we're going nowhere, still moving in a range, sideways movement. Okay, now let's have a look at the ETF, the IWM, Russell 2000 iShares, and here the same scenario. You see, boom, moving higher. You can see the pattern over here. So maybe now, next week, or in this month of October, above $125, maybe I'm gonna place some type of long position, and the target will be $128, because take a look over here. What do we have? We have a gap here at around $127, you know. So that gap must be filled. So above 125, I'm gonna go for $2.5, you know, 125 towards 127.50. Okay, that's it. And now let's have a look at the treasury notes. oh, excuse me, first of all, the yield, the 10-year treasury notes. Let's have a look at the yield over here. You see bearish, and we are at 1.5%. See the triangle over here, break, rejection, and we are still here. We see a convergence of all three measures, moving averages, 4-week, 8-week, and 21-week. But we are moving sideways in a range between 1.5% and 1.6%. Now let's have a look at the US Treasury bonds, the 30-year Treasury bonds, the yield now, and the yield, the performance for the yield is at 2.3%, and we are going lower, but still in that range between 2.2% and 2.4%. Now let's have a look at the tradable bonds, tradable CFDs. First of all, let's begin with the 10-year treasury note, and here you see we are going down, sideways movement. We reached that past resistance. You see here resistance 1 time, 2 times, 3 times. Now supports over here. So I'm expecting more moves to the downside, because we're already below the 21-week EMA, very important moving average, the 21 moving average, very important. And now you can see that we are moving towards the 52 weeks moving average. We already have a complete bearish candle below the 21-week EMA. See the convergence, and now let me amplify this. You can see here that the 4 weeks and the 8 weeks moving average are already below the 21-week EMA and are pointing towards the 52 weeks EMA. So that's a signal. Here you can see an open, trying to go higher, touch the 21-week EMA, rejection, boom, close below, inside week candle. So next week I'm expecting, in a few weeks, and next week maybe in 2 weeks, a close below that support over here, past resistance, now support, and then boom, from 131 towards 130, 1 point. Now the US, here the 30-year treasury bond, same stuff, same scenario. You see here past resistance 1 time, 2 times, 3 times. Now support over here. We are going down, close below the 21-week EMA, 4-week EMA, the 8 weeks moving average, crossing below the 21-week EMA, pointing towards the 52 weeks EMA, open over here, trying to go higher, rejection, close below, inside week type of pattern. So now I'm expecting markets to go down, but over here at the past resistance, now support, I see this pattern, it's a tweezer bottom, so maybe you can go higher, but you see over here tweezer bottom, trying to go higher, rejected. We've been stopped here by the 21 weeks EMA, acting as a resistance now, and then you see here you came back and closed below. So I'm expecting sideways movement, and then I'm gonna wait for a confirmation, for a direction or towards the upside. But I see more probabilities for the treasury bonds to go to trade lower, below $166, or over here, and going lower towards the region of the 52 weeks moving average at $164. Okay, now let's proceed and let's take a look at the US dollar index, DXY. As we see past last week, sideways movements, 52 weeks moving average as a resistance, 21 weeks moving average acting as a support, moving in this band, $95, 95 points or dollars as a support, and here 96.30, 96.40 as a resistance. So we are moving in that particular sideways range type of movement. We have no direction, so maybe we're gonna have trades in the daily chart. You see it's very chaotic, you know, a lot of noise in 4 hours, so it's even worse. So I'm keep doing things my way, looking at the weekly charts, because it's less noise, and when I want to trade or move like that, you know, this type of moves, you know, 3 to 4 weeks, 3 to 4 months, you know, full of great moves. That's not a move for me. I don't know, you know. Okay, that's it now for the US indices. Now let's proceed, and we're gonna have a look at the commodities now. First of all, let's begin with oil, the crude oil. Okay, over here you see crude oil, very bullish week over here, back at the resistance of $48 a barrel. So now I'm expecting oil to go much higher, you know. And excuse me, because I have problem with the software. I have all my analysis is gone, but here at the LCO on the Brent oil, maybe I'm gonna have that. Okay, here it is. So it's basically the same, but with a few points in difference. See the pattern, shoulder, the head and shoulder, that's inverted, an inverted head and shoulders pattern. You see here the neckline. So what I'm expecting the market here to come back over here at this resistance. You see resistance now, and to trade higher. And that's the projection we see on the fundamental side. We have an agreement at the OPEC, and this is that with Iran, and then so now we can expect to see more power to the upside. You see over here, if you take that over here with the projection, this type of level. So I'm expecting a $65 a barrel for the Brent, and like a $60 a barrel for the crude oil in the next 3 to 4 months, you know. But first of all, we need to clear that particular resistance over here, the neckline, you know. And maybe after that we can have a bigger head and shoulders. But for the moment, this pattern over here, you see, it's going to be complete. If we have another bullish week, it's going to be complete. We're going to be here at the resistance of $50 a barrel, and then that's a critical level, you know. So I'm expecting chaos and maybe rejections, and maybe long periods of sideways movement, you know. So who knows? But I'm gonna be careful and watch the signs and wait for confirmations, or towards the upside above the resistance, or a potential rejection. But the channel, you can see the channel over here. We're gonna see if that plays the way we want it. Okay, now let's have a look at the US, the ETF over here. ETF, see the ETF, bullish week. Now I'm gonna come back over here, and I'm expecting another bullish week as a confirmation, and then I'm going to break above the 21 week and the 52 weeks moving averages, and then trying to reach that past resistance over here, the resistance of $12 for the ETF. Okay, now let's have a look at precious metals. First, gold. Here we see gold, a bearish week, type of sideways movement, inside week, not an inside week, but a bearish reversal. And you can see over here that we have a bullish flag. That's a type of bullish flag. See the bullish sentiment over here and then the flag. So maybe we're gonna come here and bounce at the 21-week EMA and then go up, or if we break below, if we close a confirmation of a bearish candle closing below the 21-week EMA, then boom, we can go lower. And that's a good sign for us, for people who are like me and other people who are buying physical gold, the bullions, golden bars and all that stuff, and coins. And that's great because we're gonna have it a little bit, we can purchase it at lower prices, so it's gonna be a little bit more affordable. That's $100, you know, downside. So that's great for people who are buying it, who are buying the physical metal, you know. So then we're gonna see then the suppliers, they're always gonna adjust the premium, but it's gonna be a little bit more cheaper, so that's great. Now let's have a look at the GLD, GLD, the ETF. We see here a engulfing bearish type of candle. Let me zoom in. See, boom, engulfing bearish and bearish rejection. So over here you see we are back at the back here at the supports, you see, and you can clearly see the formation. That's boom, excuse me, like that. I'm gonna zoom out a little bit. You see that bullish flag over here, and you see the trend line. Let me zoom out a little bit more, like this. Boom, you see the trend line over here, one time, two times, acting as a support. You see the 21-week EMA. So now a close below the 21-week EMA, break below that particular trend line, boom, in direction of the 52 weeks EMA at $117, you know. So that's it. Now let's have a look at silver. Silver, and here silver, bullish flag also, boom. Here we have a bearish rejection, still here at the resistance. We're moving sideways. We have a past resistance now acting as a support, but we have that, you see over here, we're already here at that type of support over here, now support, and you have that range, you know. So me, I'm expecting if we go lower, close below the 21-week EMA, I'm expecting to short silver below 1850, and my target will be that area over here, that past resistance, now support, the area of the $1650 region of the 52 weeks moving average. Now let's have a look at the SLV, the silver iShares silver ETF, and same scenario, sideways movement, bearish rejection. Here we are already at the 4 and 8 weeks EMA in direction of the 21 weeks EMA over here at that particular support over here. A close below, I'm gonna go below 1750 in direction of the 52 weeks moving average at 15 or $16, you know. Over here, that region, 52 weeks EMA, corresponds with that particular pivot point over here, and that a past support, past resistance here. Okay, and finally let's have a look at Bitcoin versus the US dollar. The pattern over here, the cup and handle, you see that's already happened over here. And here I'm expecting that, but we're going nowhere. We have no direction, so we need to wait for a confirmation, or to the upside or to the downside. But me, I see more potential for silver to go down. I'm expecting silver, excuse me, the Bitcoin to go down over here, that past resistance you see here, and we already trying that. So now we need a close below the 21-week MA, and then boom, I'm gonna go lower from 590 towards 480. Yeah, 580 towards 480. 100-point drop, it's possible with Bitcoin. Now I'm gonna discuss a little bit excuse me, Amazon. I'm going to discuss a little bit Amazon, because as you can see, this summer I was expecting Amazon to go higher, to go and to reach the $100. I was in a trade. I traded this. That was a successful trade, but I didn't catch the next move, from $805 towards $830. The projections are that Amazon can reach, and is going to reach 850, even 860. The point is that we are overextended. When I'm looking at the, I'm gonna clear this because this makes no sense. We are overextended as far as when I'm looking at the markets, and there is a lot of risk, but we can still take a few points, on with Amazon by trading the shares. So maybe I could do it maybe next week. Place like a trade over here, maybe. Excuse me, I'm gonna amplify this like this, maybe, a trade above over here, above 840, and trade a small position, 840 towards 845, or 840 towards 850. That's possible, small position, less than 100 shares, or maybe 50 shares, something like that, just to have 10 points, 10 points with 50 shares. That's good money, that's enough for me. Okay, so that's it. So maybe I'm gonna wait and see. Maybe I'm gonna place a small order, because I think that maybe we can see another bullish week, maybe one more, because you see here we have the bullish channel over here, and you see here the resistance, and now we are closer to the resistance. So maybe I'm expecting the markets, you see the volume, so I'm expecting one more week, one more effort. And that's possible with Amazon, 10 points, that's very, very, very possible. And then boom, and then I'm gonna wait. But we can also move in a sideways. You can have also that type of sideways movement, and maybe go back a little bit. So I'm gonna measure that, I'm gonna study that, I'm gonna analyze it, and I'm gonna see. Okay, that's it for the charts. And now let's have a look at the economic calendar. See the macroeconomics and microeconomics data release in the United States for this week, starting Monday, October the 3rd. What do we have in the US at 4 p.m.? US ISM manufacturing PMI from September. And then some few release in Europe at 10 o'clock. We have something. And on Tuesday, October the 4th, what do we have? Australia, we have interest rate decision. So for those of you who are trading the US dollar versus the Australian dollar, for those of you in the forex market, have a look at that, speech at the ECB, nothing of great importance in the US. On Wednesday, what do we have? Speech at the Fed, at the Federal Reserve. And then in the US at 2:15 we have ADP employment change from September. And in Canada, for those of you who are trading the USD CAD, we have balance of trade from August. So make sure you have a look at that, you know. And at 2:30 back in the US, we have the balance of trade from August. And then releases, here you can see a speech from the Federal Reserve members. At 4 p.m. in the US, we have ISM non-manufacturing PMI from September. Another speech here at the Feds, another speech at 11 p.m. on Thursday, October the 6th. What do we have? Balance of trade in Australia, for those of you who are trading the USD, AUD, the Aussie dollar. And in the US, what do we have? No big data release. Some speech over here in Europe, and then in Canada, and we have a G20 financial ministers and CB governors meeting. And then on Friday, October the 7th, what do we have in the US? Only here at 10:30 a.m. we have in Great Britain balance of trade from August, though for those of you who are trading the cable, the pound versus the US dollar. So make sure you take a look at that. Over here at 2:30 in Canada, we have employment change and unemployment rates. So for those of you who are trading the US CAD, US dollar versus the Canadian dollar, those of you in the Forex. And here at 2:30 we have the NFP from September. We have the unemployment rates from September. And that's it. And on Saturday we have a speech here for Mario Draghi at the ECB live from Frankfurt. And we have also the IMF and World Bank annual meetings on Saturday and on Sunday. And yesterday was October the 1st, Saturday, the Chinese renminbi, the yuan, yeah, was added to the IMF baskets. So to the IMF basket, the SDR. So now we're gonna see how it's play out, you know. Okay, so people, all right, that's it for this episode. Thanks for watching. Subscribe, share, comments. Bye. Have a great week, successful trading, and see you next week. Okay, bye bye. Ciao. Thank you.